Good evening, everybody. Tonight we're going to kind of work on what we kind of had our last uh, training session this past weekend, um, where we went through the top ranked signals and patterns, which this works out to be a very good topic because this is exactly what we'll be looking at tonight, especially in the Dow. Notice the Dow today, opening lower, closing higher, did a left-right combo. And as we did our um, quantitative analysis of the strongest reversal signals, the left-right combo is right up there near the top. And so it has that very strong implication that there is going to be more upside. Just the what do I want to say? Just the results of a left-right combo produces a very strong price move. And then you add that to the visual analysis of what pattern is setting up. If we can see a J-hook pattern is setting up, and we know there's should be a high probability that there'll be more upside after a left-right combo, especially after it's supported right here on the T-line, the probabilities are pretty strong we might be in our next wave of a J-hook pattern. Oh, Gary, thanks for that, but I haven't even been in a car now for like 4 days. Okay, thank you. Yep, yesterday was my birthday, and the best place I could spend it was laying on the couch. So anyways, this is a good example of knowing what our strongest reversal signals are and what our strongest patterns are. We can do the same analysis on the NASDAQ because yesterday we had kind of our doji spinning top right off the 50-day moving average, gap up, our best friend signal, and notice what it did today. Came back and used the T-line as our as the support level and traded up above there. So even though the NASDAQ was up 2 pennies on the day, you can see it was a strong day in the sense they opened it here and started trading positive from that level. So for you folks that are new in here, the blue line is the 50-day simple moving average. The gray line is the 20-day simple moving average. And somewhere in here should be, I think, the 200-day. The red line is the 200-day simple moving average. But here's the important one. This is the T line, the 8 exponential moving average. In correlation with candlestick signals, this becomes one of the most powerful trend indicators that you'll ever come across. And the reason that is because if candlestick signals are the graphic depiction of what's going on in human nature, and the T-line acts like a natural support and resistance level, a Fibonacci type support and resistance level, the black line is the T-line. That when you combine those two together, you've got a very powerful trend indicator that they're both based upon human nature. So I'm going to go through some of the top signals and patterns, but before I do that, I'm going to go through the ones that we're kind of been trading here for a while because of the signals and patterns. Here's a fry pan bottom on ABOE. You can see that it's pulled back, but today it came back up. So you've got a little scoop pattern. This tells us this uptrending channel is probably in progress. ARWR, I'm going to run through these real quick and then get to the ones that have real strong signals to them. ARWR, same scenario, and this is kind of to illustrate that once you're in an uptrend, if you have a day like this, candlestick signals make it very simple. But if you didn't stop out up here because of your shooting star signals and you held on to it, there was only one thing you could do the next day. It needed to open positive and trade positive. In this case, it came right back up above the T line. So our simple rule, again, is that if it's trading above the T line, you're still in an uptrend, still working nicely. We've been long PFB. Notice how it had the reversal down here, a gap up through the T line. It stayed above the T line. It came back, did the J-hook pattern, the morning star signal right on the T line, still continuing up. And we expected a big day today. And the reason we expected it is because this is a kind of our double doji setup. That when they consolidate and they do it in an indecisive manner, doji, doji, if it opens positive, expect more upside. ERII, ERII. On your rounding bottom, just staying long until we see a confirmed sell signal. Bass, one of the oil companies. Whoops, make this bigger. Nice fry pan bottom, and it came up through the 50. And this is your advanced methods rising. Notice when they took it up, brought it back, brought it back, brought it back. But each time they brought it back, the bears couldn't knock it down below this level. That tells you the bears aren't in control. The bulls step back in, and this continues to confirm the fry pan bottom pattern. So if you always keep in mind, whether you're new at candlesticks or been using it for years, if you just keep in mind the candlestick signals and patterns are the accumulation of everybody that's been buying and selling during a specific time frame, and prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So NIBX, this looked good a couple days ago and then it faltered, but here it is right at the breakout level. If it breaks out, where's your next target? By the top of this trend channel. So this merely gives us an opportunity visually to see what's going on in investor sentiment. This is what we call a 45 degree. Big price move. As long as it stays above the T line, this 45 degree will stay in progress until it's time to take profits. And when do you buy it back? When you see a buy signal and a close back up above the T line. So now you have that little mini scoop. You can still be buying this one. For some reason, WTTR just does not come up on this this service. I don't know why. And QEP was another one where they announced that some deal wasn't working. It was still a fry pan bottom. They gapped it down. We held on to it. Normally we'd have closed this out, had it closed near the lower end of the range, but notice how it did an indecisive day after bouncing off the 50. Mike, read what Jim has told you up there at further up. There's a little icon up at the top of your screen that has arrows pointing in or arrows pointing out. Click on that, and that will make the size of your chart better. So anyways, you can still see the trajectory of this whole pattern, still a fry pan bottom. I'd still be a buyer of this one on positive trading, because it looks like there's still a gap to fill up here. And what are we looking for out of these high profit patterns? Big breakout moves. And RAA. We went short because we had the doji gap down, but then after a couple of days we had the bullish engulfing signal, which told us very simply that if it opened positive the next day, you close out the position. Somebody was asking, well, why would you do that? It hasn't closed above the T-line. Because we were in the oversold area, we saw a bullish signal, and if it opened positive the next day, the buyers are still there. It's kind of telling you you're in a bad probability area, that you're seeing buy signals closer to the oversold area, close out the position. Now you've had a doji sandwich, a high probability trade set up, and another indecisive day. This makes this trade very simple. If it opens positive tomorrow, you've got the prospects of another doji sandwich telling you that this day right here and this day right here will be the same, which tells you they're breaking out through the handle of this scoop pattern. Watch for a slingshot effect to the upside. So knowing what should happen based upon the signals and the patterns just allows you to be prepared to not only take or get into a nice profitable trade, but usually in the high profit trades. All boats will rise in a rising tide. We have the opportunity to analyze which boats are going to rise a heck of a lot faster than the normal rising tide. You can see why we're still long buff. There's a fry pan bottom breakout. We just stay long. We're in the overbought condition, so what becomes our safety stop? We don't want to see it trade back below the low of today. WST. This is what you call the classic pattern. A fry pan bottom. What do you expect coming out of a fry pan bottom? A strong price move. What do you expect when you see the profit taking? Well, if it supports at the T-line, you're getting ready for a J-hook pattern. What's a J-hook pattern? A strong price move, consolidation, and then the next move is usually the same magnitude as wave one. It's called the classic because the fry pan bottom is creating a strong price move, and the J-hook pattern needs the strong price move as a prerequisite going into the next wave. We've been long MYGN because of one very simple rule. When it broke out big, we had a 45 degree, and how long do you hold on to a 45 degree? Until you see a sell signal and a close back below the T-line. So this type of analysis basically keeps those that are like I used to be, that if I had a profit, I better take my profit quick before it turned into a loss. At least now we can see how long to stay in. Again, there's our classic fry pan bottom. This is SGMS. Notice our pullback, very indecisive. If it opens positive tomorrow, we've got another doji sandwich going into wave three. Where does the mini scoop fit? Usually a mini scoop is the Morningstar signal at the end of flat trading. It gives you a good prospect of that there'll be a slingshot effect to the upside. Don, yes. Candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame, this could be a 1-minute chart, this could be a monthly chart. It's still going to look exactly the same. I used to day trade the E-minis off a 1-minute, 3-minute, 10-minute chart combination. We're still looking to go long on this one. There was your best friend, doji gap up. Opened lower, traded higher today, so we didn't do anything. But if it opens positive tomorrow, breaking out through this level, we know that this move is going to be the same magnitude as this move right here. Yes, the simple analysis of candlesticks is, again, that prices do not move based upon fundamentals. Prices move based upon investor perception of fundamentals. So here's another J-hook type pattern with a Morningstar signal coming back up through the 200, kind of a bobble breakout. Very simple. If this opens positive, you can be buying immediately, anticipating this day right here is going to be the same as this day right here. So not only does this give you entries for swing trades, but even if you're a day trader and you know the simple rule of the doji, that prices will usually move in the direction how they open it after a doji, that if they open this one positive, even as a day trader, I could calculate that my price move will be the same as this one. So whether I'm trading options or stock, at least I know which direction I should be trading. EFII, just stay long as this stays above the T line. X-ray, X-ray has to open positive and trade positive to stay in this one. Again, the T line, the aspect. Notice on Corey, more than likely you're in a classic situation. Big fry pan bottom breakout. If this starts trading positive, your J-hook pattern is going to tell you the next wave will be the same magnitude as this wave. KRS, cores, J-hook pattern. You stay long as this stays above the T line. So once these set up, you know what the pattern should be doing, and you can use the T line as your stop. So here's a case where we don't want to see a fry pan bottom, see a sell signal, and a close back below the T line. So yesterday, when it did a big bearish engulfing signal, the only thing that it could do at this point was open positive and trade positive. With it closing below the T line, if it opens weaker tomorrow, figure it's at least coming back to test the 50-day moving average. That's a fry pan bottom that didn't confirm. And that's, again, the great advantage of candlestick signals is we're right about the same level this fry pan bottom started. This is where it should be breaking out. The fact that they did a bearish engulfing signal right at that level also told us valuable information. It wasn't breaking out. Close out the position. Wait for the next buy signal. Kind of the same scenario on CRC. We've been long on this one. We had a doji left-right combo. If it opens lower tomorrow, we close out the position. But we just watch to see what happens once it gets here to the T line. Where on MYGN set steady Eddie could you jump in if you miss the first signal? Well, there's a lot of times where if you've missed the first signal, right here would have been another place to be buying because it told you you kind of had a little fry pan bottom ready to break out. And so there's a lot of times where you can take a look at this and say, is this my best place to be putting my funds? Or should I just continue to hold a position if I was long? And should I go back and find something that looks like this where my prospects are much better? Hold on to your individual ones until I tell Jim to do the double line. I'll get to as many as I can tonight. Yeah, we're not even through our list of the ones that we've been following. HK was another situation. Fry pan bottom. It opened positive and closed back below here. So that would have had me closing out the position. Or if I stay long, I know that it has to stay above the T line, and I prefer to see it open positive and trade positive. But you can see where this should have broken out, right where this pattern started, which is also right at the 200-day moving average. Hold on, I'm watching the national anthem at the Packers game to see what's going on as far as our politics. Okay. Now, the strongest signals that we went over this past weekend, the top of the list was our best friend signal. So yesterday, we saw a doji gap up on KEM. And so this is a very significant analysis in the sense that they gapped it up, took it up, brought it back. Well, is that a sell signal? The stochastics are coming out of the overbought or oversold area. So very simple analysis. If this is the profit-taking area and they gap it up or trade it back up into the profit-taking area, the profit-taking's over. The force of this signal is still in play. And Einstock, if you've missed the trades, remember, these trades will occur every single day. You're always going to be able to find something out of the 10,000 trading entities. There's another example. Notice the fry pan bottom, breakout, profit taking. Then they opened up positive and took it right back up. That's a good fry pan bottom breakout. You can still be buying this one. And ABBV, hammer gap up through this resistance level, probably indicating there's more upside. Part of your J-hook pattern. This next move could be the same magnitude as this, which was about 20 points. And ICHR, same scenario. Notice our doji gap up through this resistance level, showing you a lot of strength. So the best friend signal is a very high-powered signal in the left-right combo. You can see where the left-right combo occurred in situ. I know that there's been a lot of people trading this in the chat room. Very simple analysis. You can see the scoop type pattern. You can see the very strong left-right combo confirm. How long do you hold on to this one? Until you see a sell signal and a close back below the T line. The little green line is the, is it on here? I'm not even sure that, yeah, on some of the charts I've got the 3T line, which is the 3 exponential moving average, which works more, I guess it's not on here. So you've got the 200-day simple moving average, the 50-day simple moving average, and the 20-day simple moving average. Again, these are all the moving averages that every major money manager around the world uses to make their decisions about their portfolio. The advantage we have as candlestick investors is we can see exactly what they're doing at those levels. So notice again, we had kind of a little scoop pattern, left-right combo. Then we had the doji sandwich, the simple rule of the doji. They're going to move it in the direction of how they open it after a doji. They open up positive. What's that telling us about the 50? 50 is not going to act as resistance. Another doji sandwich. What do we know about the doji sandwich results? That there's usually more upside. What was our next target? The 200-day moving average. Now, here's where we start looking for sell signals. Remember, we said if we see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. However, the caveat to that is the further away you move from the T-line, the higher the probability it's going to come back and test it. So now that we've moved that far away from the T-line, we'll be trading off the 10-minute chart tomorrow. If it opens positive, we watch to see if there's any selling. If it opens positive, I'd immediately put a stop right here at this level. If it opens lower, I'd probably close out the position immediately. If it trades up even further, then I'd go to my 10-minute chart and see I'll watch the 10-minute chart to see when there's a confirmed candlestick sell signal on the 10-minute chart coming back below the T line. Let's see. On a steady eddy, should you take your gains and look for another breaking out chart or stay in it until a sell signal? You can't ever tell how long this is going to last. And that's the big problem with most investors is they got a good profit. I mean, a lot of people, if they bought here and had a profit up here, what would be their first inclination? Oh man, I'm up 20%. I'd look stupid if I let this turn around and go to a loss. So they take their profits, which cuts off the prospects of being in a big price move. So the nice thing that we can apply to candlestick analysis is where most money managers tell you to cut your losses short and let your profits run, but they don't tell you how to cut your losses short and let your profits run. Candlesticks make it very simple. Right now, I'd be ready to take profits on the first sign of profit taking. Is it impossible that the 3 EMA be under the 8 EMA in a uptrend? Usually not. No, the 3 EMA is obviously a much faster moving stock. Now we don't have the 3 EMA on this chart. Oops. Hold on. Yeah, hold on. Wow. So, yeah, right, that's the 20. We usually have the 3. And some people will ask, well, do you buy or sell based upon the crossing of the moving averages? And the answer is no. The top priority for candlestick signals is the signal itself. Everything else then becomes a confirming indicator. The topping tail in KEM. No, the topping tail was profit taking on that day, but where were we in the trend? We were just coming out of the oversold condition with a doji gap up, your strongest signal. That was just profit taking. If we knew that it opened positive the next day, which it did, but the profit taking was over, the strength of this signal was still in effect. Revlon, yes, who knew? But the answer to that is we don't know why something moves when it moves. All we can do is buy the strong signals because it's moving based upon everybody making their decisions to be buying and selling. We just can graphically see where that's happening. And then when do we sell? When we see a sell signal, which it hasn't done yet. Revlon. The bobble pattern, a very high probability pattern, which is comes up, hits a resistance level, pulls back, then comes back up through the resistance level. That usually has a good slingshot effect. And where was the next likely target? Probably coming up here to fill this gap. Yes, you don't always have to sell the whole position. Einstock, we put the trades on every night in the members area. Again, I put out 2 or 3 stock picks and a video to show why. So we don't put out the stock picks so that people have stock picks. We put out the stock picks so people can analyze themselves why that is a good position to be in, or the probabilities that it's a good position to be in. On the other side, we want to teach people how to do their own scanning. So that if the picks that we recommended, again, which may have come from a basket of 15 stocks and we had to pick out the best 3, those might not be the ones that are opening up the best the next day. Yeah, usually when the price comes back down below the T-line, the 3T line will come back down below too, but that's a whole different training session. So when you see a bobble breakout, see where it hit the resistance, pulled back right to the T-line, came back up again. A bobble breakout is basically a J-hook pattern, which has much more definition to it. It shows you exactly where the resistance level was and where the new buying is coming in for your J-hook pattern. So it's just a high probability trade setup. So as you're doing your analysis, you can see different sectors, like the golds are starting to pick up right now. This is IAG. You can see wave one, wave two. Now they're coming back up above the T-line, going into wave three. I don't know whether this is actually a gold, but I think, anyways, there's a nice fry pan bottom on Gold Field Corporation. And so, again, the strongest signals and patterns come from things that you know everybody else is watching. Notice in soda. Well. You had kind of this wedge formation. And when we got out here to the point, look what they did. Bullish Harame hammer right on the 50, gap up through the top. That tells us we're now in a whole new dynamic. That's why we recommended soda today on a positive open, because if it did a positive open, what type of signal did we have after coming out of a wedge breakout? A doji sandwich, which told us we had more upside. Get rid of that thing. And so we want to look, or at least have the mental input to watch for our little, there's our little scoop pattern. There's our doji sandwich. What's this imply? Well, we know what happens out of a scoop pattern, a strong slingshot effect. We know what happens after a doji sandwich, more upside. So this makes this one a very high probability trade setup. We also know the kicker signal, like we saw in Micron. Took it down, gapped it up. There's probably a lot more upside because of the kicker signal. And snap, kind of a scoop pattern also with a doji sandwich, probably more upside. If you're buying this one, all you do is watch to see what happens once it gets up here to the resistance level. If it breaks out through that level, it's going much higher. I did that wrong. PBF. Yeah, this one. Notice our morning star signal, J-hook, still in a nice steady uptrend. HEF, another of the refineries that was acting well. Remember where your signals occur. A shooting star does not occur down here in the oversold area. A shooting star occurs when stochastics are in the overbought area. This is just starting. This would be more inclined to be an inverted hammer, even though it's not at the very bottom. But again, the confirmation was very simple, that if it opened positive after the profit taken, remember, this was just starting up in a new uptrend. That was not a shooting star signal. And a hanging man is this one right here, where the tail is to the downside and the head is up here toward the top. Einstock, yes, we put out 2 or 3 stock picks every day. That's what you see in the morning comments. We go through and kind of follow up on what the picks were the night before. And fizz, observe the obvious. The obvious is this has been an uptrend. It consolidated. Somebody was asking for a sell signal. There's your sell signal, a bearish engulfing signal. It opens above the previous day's close and closes below the previous day's open. This body completely engulfs this body, not necessarily the shadow, just the body. Then we come back down here to our buy signal in the oversold area. A bullish harami followed by a doji sandwich. What's the implication here? That we're ready to come right back up to get into this trend channel. And BPMC, notice your uptrend. Started with a morning star signal, big down day, 2 indecisive days, then your little best friend signal back up above the T line. Where was the sell signal? Bearish engulfing signal. It's time to get out of this trade. When was it time to get back in? There's your morning star signal and opens positive, again, after closing above the T line. How long do you stay in this one? So you see a sell signal and a close below the T line. Why is this a J-hook setup? Got a strong price move. The pullback was very indecisive back to the T-line area. Now you can kind of calculate that this move right here is going to be the same as this move right here. Con, same scenario. Morning star signal. There was your sell signals. Back to the T-line, very indecisive. Then there's your left-right combo. Where was the breakout? Right here. And what type of signal did we have? Our doji. And so if you just apply the simple rule of the doji that it's going to move in the direction of how they open after a doji, knowing that it opened positive, told us that this candle right here was probably going to be the same magnitude as this candle right here, which told us this area right here is now broken out, that you're in the next wave. Inverted hammer, doji, bullish confirmation. And again, where did you see the breakout? Right in here with a doji sandwich. What'd that imply? That this was not going to be a resistance area. We're going much higher. I'll see if I can find a bobble pattern here again. FGEN started back up, sold out, can buy back in because you got a scoop pattern or a J-hook. You can be ready to buy this one, especially if it breaks up through this level. So visually, we can see the consolidation is disappearing based upon those little patterns. Tour, right smack dab off the 50. A hammer, inverted hammer doji, bullish confirmation. Where's your next target? At least right here. And probably another trend, same magnitude as this one. So the J-hooks are plentiful right now. There's again, this is where you can easily learn how to use candlesticks successfully. There's our inverted hammer harami. What's our percentage if it opens positive the next day? Probably 95% or greater that you're going to have an uptrend. There's your kicker type signal. So this is a case where if it was trading here and opened down here and started trading lower, you took your profits. Where was it going to move to? Probably at least back to the T-line. Now what happened on the T-line? Did another little best friend signal. What's that tell us? But our J-hook pattern is probably going to have another move the same magnitude as that move. CZR, same scenario. Hanging man. That's a hanging man in the overbought area and opens lower the next day. Take your profits. You can always buy back if it's doing another pattern. This is kind of your classic. There's your fry pan bottom. There's your J-hook. J-hook pattern, FUL, MXL, another J-hook pattern. Let's get rid of that thing. This is almost a bobble. Almost hit the resistance level, but reversed. Now you're coming back up through the 50. Where's your next likely target? Either here or fill in the gap here. Let's see. There's your J-hook pattern. Classic, fry pan bottom, J-hook. Notice what it did right here at the 50. A morning star type signal, and then they confirmed by moving out through this level. Tells you there's probably another wave of this magnitude. And IMGN, what happened at the 50? Indecisive trading. Doji's bullish confirmation back up above the T-line. If this opens positive tomorrow, you can still be a buyer, because what's going to happen? You're going to have a doji sandwich in progress. CINF, a bobble. Kind of. I would consider this not so much a bobble, because usually you see the trend come up, hit it, and pull back. This is more of a fry pan bottom breakout. And our short that we're still in is this one because of the same pattern. Notice where the downtrend started, your evening star signal. Then notice the failure right in here. There's your little shooting star failure. There's your doji sandwich. And what was relevant about this doji sandwich? Because if it opened lower, this support level was being broken. And what did you have? You have a bearish J-hook pattern. So again, this is not rocket science. This is just seeing what human nature normally does. The 50-day moving average is just a target. Everybody's watching to see what it does at those. That's why they kind of act like magnets. Let me go up here. Is this system how you define the trend? Do you define it in relation to the 50-day moving average? No. I'm defining it based upon what the signals. This sell signal and a close below the T-line told me I have a downtrend until I see a buy signal. In this case, I probably would have covered my short positions right in here, but then reshorted it here once I saw the T-line. So the 50 or the moon, these are just indicators that everybody else is watching. The most important aspect of candlestick analysis is watching the signals themselves. That's why they're called candlestick signals. They've been around for 400 years, and the Japanese rice traders didn't become wealthy using candlestick analysis. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. And not only did they become wealthy using candlesticks, they became wealthy using candlesticks on the most blasé trading entity in the world, rice, which doesn't move around very much. The bobble pattern. Just a more defined J-hook pattern. Notice how it failed up here, an evening star signal, pulled back. They couldn't close it below the T-line. They brought it back up through the resistance level, creating a J-hook type pattern. The only difference is we could see exactly where that top was because of the failure at a resistance level, and where to start buying when it comes back up through that level. Are there any books about these people? There are. I've written 3 books that are on the website. The basics of candlesticks with all the signals. Then the meaty book, which tells you the high profit signals and patterns. And then the third book is what most people have a problem with. It. Even if you have the best trading system in the world, if your emotions are still controlling your trading, you'll never make money. I've never traded rice because it moves too slowly. I trade things like crude oil. This is what crude oil is doing, uptrend, kind of selling off a little bit over the last couple of days. I trade lean hogs. We've been short lean hogs from here, covered it here, reshorted it here. We're still short. Right now we're long wheat, but if it closes below the T-line, we'll close out that position after failing at the 50. We're just watching to see if it will hold at the T-line, see if we've got a bobble pattern setting up. What kind of scan do you use on these charts? There's different scanning softwares, Metastock, TC2000. I think people use Thinkorswim also. All our formulas are out there at the different charting. Ninja Trader. I think we're trying to get set up with TradeStation. So anyways, yeah, all our formulas are out there with most of the scanning softwares. Some of these bobble examples do close below the T-line at one point. And we probably wouldn't have been in the trade. But if it closed back here, you would have been out of the trade. Now you think about going back into the trade. And there's some trades that don't break out like they should. The trade becomes just like anything else. Trying to find. See the breakout here on Eames, your fry pan bottom, your cup and handle, your bobble breakout, made for a good trade. There's your sell signals. Dojis, shooting star, bearish engulfing in the overbought area that told you it was time to start taking profits. Would you buy the bobble breakout on the same day? No. If I was looking at a bobble breakout, which one were we looking at? I wouldn't have bought it today. I wanted to make sure it closed above the T-line. Now, if it starts trading positive tomorrow, yes, I'd be more apt to buy it. I'm trying to think of which one didn't. There's shoot. There was one that didn't work. Let me find it. DOB. Let's see. There's your little bobble breakout. It was a QEP. No, that wasn't so much a bobble. Oh, it did. Yes, but that did break out right here. So if you were looking to buy a breakout, that's where the right place to be buying. So if price closes it below the T line, you're out, or do you wait till end of day or open? Depends on what time frame you're trading. If you're trading intraday, yes, you get out. If you're trading off, let's say the 10-minute if you're trading off with a 10-minute chart and it trades below the T line on a sell signal, yes, you close out that intraday trade. If you're trading as a swing trader, yeah, you might have it at the end of the day closing below the T line, but the daily chart is still telling you you're still in an uptrend. All right, Any more general questions on candlesticks? If not, Jim, do the double line. Kind of keep your requests at one apiece. As my leg is, the T line is the 8 exponential moving average. And Jim, do the next double line. Oh, we are doing a special. Becky, do you have the let me see if I've got it here. This is oriented toward the T line. On the wedge breakout. So I've just put it in right now. For you new folks, that's for $17 you get a lot of good information. You cooked some rice tonight. All right, I'm trying to figure out where all this started. The T line is the 8 exponential moving average. You put it on your chart just like you would the 50-day moving average. Instead of a simple moving average, you make it exponential. Alta, kind of a little J-hook. Nothing wildly exciting on this one just yet. You do have the prospects for a day trade that if it opens positive, you've got a doji sandwich. But the magnitude of this day and this day should take you right up to the 50-day moving average. BlackBerry, the big breakout tells you to start watching. If it opens positive, look for a 45 degree to come off of here. ZYNE, this is what you call a message. The message is they've gapped it up, but there was profit taking. So what do you want to watch for? You want to watch to see when the profit taking is over based upon probably a candlestick doji or hammer type signal. And then you can start buying it once the profit taking is over, because the message was they wanted to get into this one with great enthusiasm. So this is one of your high profit trade setups, is knowing when to, what signals to see telling you the profit taking was over. JP Morgan is usually not a very good trader, but you can see the J-hook pattern, best friend gap up. I would suspect this one will be in an uptrend for a while. OCRX, I wouldn't be long or short this one right now. If this one opened lower, I'd be out of it, because you can see how they failed at the 200. I wouldn't buy it until it comes back up above the 200. FAS, yeah, kind of your little best friend gap up J-hook type pattern. Yeah, notice your left-right combo right here, followed by a gap up. Told you we're still in an uptrend. PayPal. Another one you can get ready to buy. If you closed it out here, you get ready to buy it back here. But it's, again, this is the trajectory, so you can kind of calculate what your upside potential will be. And CSOD, left-right combo, J-hook pattern, you can still be buying this one on positive trading. Next target is to see what it does right up here. HRTX has to open positive and trade positive to stay in it. If it opens lower, watch for the bobble setup. Whoops. KTOD. That one I'd be out of. With it closing this direction, yeah, I wouldn't be back in this one until they can bring it back up above the 200 with a buy signal. IPXL, I'd be out of this one also. Nothing here. No trend, and you're trading below the T-line. Fitbit, stay long. I'd use today's low as my stop. If it came back through there, that tells me this little resistance level is giving you a trend channel. ETN, you want to be going short. More than likely, they're bringing this one back down to at least the 50-day moving average. You can see the left-right combo and then close below the T-line. Stochastic's heading down. This one's, you look for the next support level. YPF, just stay long. Use today's low as your stop. If it comes back down through there, they're not able to get back up through the 200. Nugget, nothing yet. Now, the gold stocks did act a little bit better today. Nugget didn't. I wouldn't be buying Nugget until it closes back up above the T-line. GE, just not a very good-looking chart. I wouldn't be long or short GE unless you're trading very, very finely, I want to say finely traded options. AEMD. This one, nothing. That's just not a good-looking chart. Silver, also trying to bottom here. You had a little inverted hammer and a doji, stochastics in the oversold. You start watching to see if it's going to start coming back up. Costco, you stay long. Just don't let it close below the T-line, and obviously you want to see it get through the 200 very quickly. And STM, Morningstar signal, bullish confirmation. You can buy this one on positive trading tomorrow and simply use the T-line as your stop. It shouldn't come back down through that level. What is that? AMRN. Another one that has to open positive. If it opens lower tomorrow, I'd take profits and wait for the next buy signal. Today's bearish engulfing signal. Unit, you stay short, but if it opens positive tomorrow, I'd cover any short positions with the anticipation they're bouncing it back up to the T-line. And Roku, don't know what to tell you there. Something not coming up on that chart for some reason. QTNT, slow upward. Again, you can buy this on positive trading, anticipating a doji sandwich breakout, which would then probably imply they're heading for the next price target of the 200. iRobot, I wouldn't be long and I wouldn't be short. I would have covered my short position here just above the high of the doji, and I wouldn't be buying it since it didn't close above the T-line. Sell signal. There's a left-right combo. You got basically 6 sell signals and 6 buy signals. Google. You can stay long. It looks like it's trying to break out here. Domino's. You can buy this one on positive trading. Again, there's your doji gap down. That's your sell signal. Now your Morningstar signal J-hook pattern. And HMNY. Ever since the breakout, all you can do is stay long on this one as long as it doesn't close below the T-line. Today would have been scary. If you closed it out, you just bought it back if it came right back up through the open. And Home Depot, you can stay long on this one. Morningstar signal, smack dab on the T-line, telling you this uptrending channel is remaining in progress. Apple, Wouldn't be long or short, maybe going short, but if you're been short, would have covered it on this day because you had the doji in the oversold area with the anticipation it was coming back up to test the T-line. Now you see whether it's going to go through the T-line or fail. Deer, you can get ready to buy this one. It won't make you a whole lot of money, but if it opens positive, you've got your kind of your classic J-hook pattern after a fry pan bottom. And LOXO, big gap up today. Wouldn't necessarily be a buyer of this, but it would anticipate you're going to still have a steady uptrend. Agilent, stay short. Again, there's your sell signal. Doji closed back below. Notice all the dojis here. Then they told you which way they were planning to take it. Let's see. Did we do NVMI? You get ready to buy this one on positive trading because there's your classic fry pan bottom, J-hook pattern starting off with your best friend signal. And eBay, stay short. Yeah, notice how it was indecisive, and then they told you which way they were going on a bearish doji sandwich. I probably wouldn't be short, but I definitely would not be long this one right now. Got stuck in that pantry pride, Pilgrim's Pride. Got stuck in CCC when it broke the little scoop pattern. The other aspect of candlestick analysis, John, is if you can look at this chart, not really know which way it's going, take your money, close it out, and go on to something where you can identify what's happening. I would suspect, or I know, that probably at least 30% of my trades, one third of my trades don't work. If I know that, then I don't have the emotional attachment to a trade. I can just say, all right, this trade didn't work. Let's move on to something else. Cisco has to open positive to have your J-hook pattern continuing. Yeah, the first books I started reading on candlesticks back when there wasn't anything to read on candlesticks, I was reading books that they would start out the book showing you how to make a candlestick chart viewer by building a box, putting a light underneath it with a glass on top, and then making the charts with rice paper with the little formations. That's how antiquated it was until I think in the late 80s, probably early 90s, they started putting candlestick charts on the internet. This one you can be buying. Just make sure it opens positive. That's ASNA. Netflix, like all the biggies, came up to the T-line but failed. So I wouldn't be long or short Netflix right now, not until you see which way they're planning to move it. We did the same thing with Apple. Near the end of the 4-hour course, Joe, is that a continuation of a sentence or plus one? I don't understand. OPK needs to open positive to and stay above the T line. You can stay long on this one. AN, you should have been out of it today. If you stayed in it, it has only one thing it can do, and that is open positive tomorrow. If it opens lower, close out the position. again, that gap down from the dark cloud. MDXG, all you can do here is stay short, but use today's high as your stop. DB, Deutsche Bank, you can stay long on this one, but it has to open positive. If it opens lower, they're having a hard time getting through this level in the 50. HZNP, you can be buying this one. No, that was a red candle. I'm sorry, I'm partially colorblind. If this one, the only way to stay in it, it has to open positive tomorrow. If it opens lower, close it out, wait for another buy signal. SGY, just a steady eddy. You stay long. You put your safety stop just below the T line. It shouldn't trade back below that level. New link. If you were short today, you would have covered your short position, but you wouldn't be a buyer yet until they close it up above the T line. Boston Scientific, nothing. Wouldn't be long or short. No direction on this one. I think we did Apple. Apple, nothing. I don't know. Is Roku, is that a new issue today? We got one. Yeah. Let's see. A left-right combo is a doji followed by a bullish engulfing signal. The doji is that little left jab. The big roundhouse right is the bullish engulfing. So after a day of indecision, they told you exactly what their decision was. Okay, yes. Yeah. Roku, can't really help you there. That's more of a speculation at this point. SPPI broke out nicely. Again, there was the doji sandwich, and then the breakout through this level. I would suspect a 45-degree. Now, when you have a big price move, we did this quite a few weeks ago on the big price moves. But if this opens lower tomorrow and you're long, close it out immediately because that means the profit taking has started. The worst case scenario is they take it down. You could put a buy stop just above where it closed because if it comes up through there, the profit taking is over. Would you ever go long if a stock closes below the T line? Yes. Just like the aspect of, which one were we looking at? That the further away you move from the T line, the higher the probability is going to come back and test it. Same thing works on the other side. The further away you move from the T line, the higher the probability it's going to come back up and test it. So if you see a buy signal or a confirmation of a signal, you can start buying with the anticipation it's going up to the T line. ABV, yes, you can be buying this one on positive trading tomorrow. Alcoa, just a very slow, steady uptrend. You can see on the pullback, it wasn't very decisive. Now you've got kind of a little left-right combo again. You could be buying this one. It won't make you a whole lot of money, but it will be heading in the right direction. LOXO, you can buy in positive trading. YPF. What's the question? Oh, if it opens positive, you can be buying it because you'll have a doji sandwich breaking out of the 200. If you're long, you don't want to see it come back below today's low or down through the 200. That tells you the 200 is acting as a resistance. So you can use the doji as a gauge that it shouldn't come down through the low. If you're short on price line, you stay short. Stochastic's still heading down. And GDX, trying to base, but nothing yet to tell you the downtrend is still in progress. We do price line. Price line, you stay short. Goldman Sachs, you can stay long. It's not going to make you a whole lot of money, but it's heading in the right direction. Chipotle, nothing yet, but it is in a bobble. If you're long, it has to open positive and trade positive. If you're thinking of going long, wait for it to come up through the 50. That would be your bobble breakout. Tesla, you stay short until you see a confirmed buy signal. At this point, I wouldn't want to see it trade up above today's high. AutoZone, all you can do is stay long. Basically, you're just in a steady uptrend. Notice when they took it down, they brought it right back up. Just stay long. Micron, kicker signal telling you there's going to be more upside. Disney, nothing here. If you're going to do anything, you go short on weakness, but you can see there's really no direction to it. So if I was doing anything, I'd be short. And First Solar, nothing here either. If I was anything, I'd be short using the T-line as a stop. TC, there's 3 books on our website. High Profit Candlestick Patterns, published by Wiley & Sons. And then 2 more books after that, Profitable or High Profit Candlestick Patterns and Candlestick Profits, Eliminating Emotions. I guess for a review, you can always ask in here whether they're worthwhile or not. EQIX, I would have covered the short position right here. Anytime you're in an oversold condition, they shouldn't bring it up through the previous day's open. Now you just watch to see what they do here at the T-line area. TMUS, not a great looking chart at best. You should be short. LTF, stay long on this one. Blue is J-hook. Yeah, kind of you can see the breakout. I would suspect more upside. Just the percentage move. If it moves, yeah, it's just not a very prolific. These institutional traders aren't going to move with great resiliency. So it'll make you a little bit of money, but which would mean you definitely have to be trading it off using options. Big bearish left-right combo. If this opens lower, they're selling off crude oil, and right now, let's see what crude oil's doing. Yeah, crude oil sold off today, trading flat right now. I wouldn't doubt this is not an unusual move. Notice the T-line crunch that pushed the price right up through the resistance level. Then what happens when they go through a resistance level? They'll come back and test it to see if the resistance level is going to act as support. Okay, thanks, Einstock. Let's see, we did Chipotle, CBIO. Notice how every time they've knocked it down, they've taken it back up using the T-line as support. You just stay long on this one. NVIDIA has not been able to get through the T-line. Right now, I wouldn't be long or short NVIDIA. No direction at this point. AMD, same scenario, no direction. Would not be long or short this one. We did JP Morgan. You can be buying this one. It's just not going to make you a whole heck of a lot of money, but it's as an indicator. It tells you that they're not selling off the markets right now. Nike, another one that I wouldn't be long or short, no direction. Google, you can be buying this one with a breakout. Stay long until you see a sell signal. We did Domino's, AFMD, nothing. Would not be long or short here. Tuesday morning. Now you have to definitely see what it does tomorrow. If it opens lower, you take your profits. You're in a bobble. It needs to open positive. Then you don't want to see it close back below the 200. UCT. UCTT. Little J-hook pattern, classic. Stay long. Tiva. Nothing. No direction. I'd have my money someplace else. Abercrombie. Stay long as it stays above the T line. American. Not a great chart. Yeah, it wouldn't be anything that I'd be going after. Probably wouldn't be long or short this one. I'd be more apt to be long Southwest Airlines. ALB, you can get ready to buy this one again, J-hook pattern setup. AMRN has to open positive and trade positive. If it opens lower, they're coming back to test the T-line, and then you have to see what it does from that level. UBNT, you can stay long on this one. Not very exciting, but it's moving in the right direction. Whiting did some backing and filling today. It has to open positive or trade positive. It has to stay above the T-line to stay in it. United, another one where you just stay long, but if it opens lower, you can see that it's having a hard time getting through this level with that little shooting star. If it opened lower tomorrow, I'd come out of it and wait for the next buy signal. JD.com, stay short. Oh, I don't know what this one, ABE, yeah, I don't know. Yeah, that one doesn't look like it has very much volume in it. Hubs, stay long after the kicker signal. Mankind, you can get ready to buy this one on positive trading. Look for a 45 degree. OLED, probably wouldn't be long or short this one right now. Lou, you can always set up your scans to find the, just look for option trade stocks. IOTS, you can buy on positive trading tomorrow. If it opens lower, I probably wouldn't be long or short this one. And GPS, just steady uptrend. Don't let it close below the T-line. New link, I wouldn't be a buyer here until it closes above the T-line. Guild. If you're this one, you can go short if it opens weaker tomorrow. And Microsoft, just not much of a trader. I wouldn't be long or short this one. Just not enough movement in it. And CLVS, that's kind of a bobble breakout. Yes, you could be a buyer of this one. I think we did ABV already. You can buy this one on positive trading. Okay, everybody, we got a good market right now with the left-right combo today in the Dow. And the J-hook pattern, if you see it, things opening positive tomorrow, pick out the stocks that look like they have the best upside potential because they'll be buying. All right, everybody, thank you for showing up. Again, I think we have a special for people that want to find out more about the wedge breakouts. And we'll see everybody in the chat rooms tomorrow. We'll see you there.